Hello, my friends, welcome back. Joseph Areo, once again, is my name, and very pleased to be always uh, sharing insights with you on matters investment and passive investments in particular. Please do remember, as always, to subscribe to these videos so that you always get updates as and when I record more videos. And also, do remember to send me questions, whether by email, WhatsApp, or in whatever form you want to communicate with me. I want to talk to you a bit more about some transactions, investment transactions that I have been involved in over the last few months. So you will remember, for instance, I talked to you about buying dividend shares. Well, guess what? I didn't just preach to you about buying dividend shares. I actually went ahead and bought some. So I bought shares, for instance, in the cooperative bank. The cooperative bank is a company, it's a Kenyan company listed on the Nairobi Securities Exchange. I bought shares and I bought them cum dividend, cum dividend. That means you buy them at a price which takes into account or includes the dividend that will have been declared already. So those of you who follow the Nairobi Securities Exchange, Cooperative Bank declared a dividend of 1 shilling 50 cents per share. At that time, it was probably trading at a price of about 11 or 12 shillings per share. So that means the dividend yield was over 10%, somewhere like 11 to 12%, which is a great dividend yield. But remember, you should not always buy shares for the single reason of having a dividend. You want to be comfortable with the company whose risk you're taking by buying their shares. And so, so what are some of the things which attracted me or and continue to attract me to Cooperative Bank um, as a company or as a listed company? Well, at least a couple of things. So one, if you notice, Cooperative Bank has consistently paid dividends over the last so many years that I've been invested in them. They consistently pay a dividend, and I take that as something important because then you are enhancing what we call the total return. So the return that you get from a dividend, remember, rather from a share, is made up of two parts. So there is the capital gain. As the price of the share goes up, you're gaining on your capital plus the dividend yield. So if you add up those two, then you get a total return. So if a company doesn't pay dividends, it means you are only relying on capital gains. And that's not my idea of a great investment. So Cooperative Bank consistently has consistently paid dividends for as long as I can remember. Even during the COVID days, I think where they were unable to pay dividends because of regulatory directives, they still declared a bonus, which is good. So that is one. Number two, Cooperative Bank, like some other companies listed there, but certainly Cooperative Bank in this case, has its own CEO investing in their shares. I always take this as something important, and you would want to think about this whenever you buy shares of a company. You would want, if possible, the the CEO or the one who is managing the company to be investing in those very shares that you're buying, because then that gives you confidence that, well, this fellow manages this company and therefore is confident enough that the performance of the company going forward is such as to inspire confidence from the rest of us, and to be able to buy. In other words, you would want the manager of this company to have what we call in the industry, um, skin in the game. Okay, kind of like a vested interest. Whenever you hear someone talking of skin in the game, that is what they mean. Is the manager invested in the company is whose shares is trying to sell to you? That, in the case of a cooperative bank, is definitely the case. So there could be other reasons, but those two reasons I find to be attractive. Maybe the other reason is the cooperative bank, as you know, is a bank whose niche market is the cooperative sector. So they definitely have what I would call a captive market, a market which they understand very well, and and that gives me a lot of confidence in their ability to to make your investment worthwhile in that company. So for those reasons, I bought shares in the cooperative bank. Those are my reasons. It would be up to you. You should make sure that you do your own due diligence. But those are my reasons and continue to be my reasons for investing in that company. Thank you very much. I'll look forward to talking to you again.